Success is a game of choice where you control the odds by your enthusiastic persistence and drive. My friends, I'm still traveling. I apologize for the background noise, but that's what we got. I want to tell you what's going on today in these markets. You can see that we have a green up candle still forming for the week, but it was a down day for stocks, an up day for bonds and gold. And Bitcoin is a bit mixed. It's pretty much flat. I'm looking at different indices giving me different numbers, but I would say in the end it's pretty much flat. We'll see it when we get to it. Now let's look at the S&P 500. Derivative oscillator still losing downward momentum. Price percent oscillator negative, heading up. Green candle, although it was a down day. Remember, the overall market mood is still down. We go to the 2-day chart. What do we see there? We see a slowdown in the up movement. A red open box candle. That's what that means. If you haven't taken our Heiken Ashi candlestick training, just look it up. It's the #1 candlestick training on the web when it comes to Heiken Ashi average pace. It's my favorite candlestick to use. You don't have to memorize all these patterns. It's much more intuitive. Take that training. You'll get a lot out of it. So what do we see going on with the 2-day? Price percent oscillator losing a little bit upward energy. Derivative oscillator still heading up. We delve into the half day and we can see where things peaked on Tuesday morning and then sort of blowing off steam Tuesday afternoon and on Wednesday. Price percent oscillator positive but heading down on that half day. The weakest of all our charts, derivative oscillator heading down. That's where we are on the S&P 500. The NASDAQ 100 down 1.39%. The S&P was down 1.27%. Still, we have a green up candle for the week. Price percent oscillator negative but heading up. Derivative oscillator negative, losing downward momentum. 2-day, it crossed over 5 days ago, and we can see where, 3 days ago. It crossed over. We can see the price percent oscillator losing a little bit of momentum like the S&P. Derivative oscillator still heading up, not reaching a higher high as the prior day. And similar to the S&P, things peaked on the morning of Tuesday the 22nd. That's afternoon of Tuesday the 22nd. And I see what my mistake is. There we go. Peaked on the afternoon of Tuesday the 2nd, and then what you were seeing before, let me go back to that just for training purposes. That's showing us what's happening in after market. So the market is still trending down after hours. So again, important, you can't see up above the screen here, but you have the ability with TC2000 to look at what's going on regular hours and what's going on post hours. So what's happening regular hours is up in the morning and up in the afternoon on Tuesday, then down in the morning, losing energy, and then down in the afternoon on Wednesday. Price percent oscillator heading down, derivative oscillator losing upward momentum. So again, overall mood on both the S&P and the NASDAQ 100 is still down as far as that weekly chart goes. Both the 2 days have crossed over going up. That only takes us out of a down trade. That doesn't put us into an up trade. Very important to keep in mind. What's going on bonds? Bonds, again, reversing a bit for the day. I don't mean overall with the weekly or anything, but up for the day. 2.19%. Still a big red down candle. Lower lows this week already. Price percent oscillator spiking down. Derivative oscillator gaining a little bit of downward momentum. That's the weekly chart. 2-day, we have that 2-day recross in effect where it occurred back on the 2-day candle ending the 14th of March. And we can see a green, solid green candle. That's a slowdown in the down movement. Price percent oscillator still gaining momentum. But look at this. Derivative oscillator still gaining downward momentum. Price percent oscillator is what has gone flat. And when we delve into what's going on with the half day, we can see that it actually crossed over, going up there at the end of the day. The derivative oscillator still a little bit negative, but that price percent oscillator crossed over. So a big update for bonds as stocks started to wither on the vine. Likewise, what would you expect to happen? Where are the safe places to put your money historically when the market's going south? In gold and bonds. We haven't seen that so much in bonds this year, but we have seen it more and more in gold. Gold up 1.37% for the day, still a red down candle forming for the week. Price percent oscillator, however, has pushed back over, heading up. Derivative oscillator green, but losing upward momentum. We look at the 2-day, it was going down at a steeper angle. That slowed. We have a green spinning top forming. The first day of this latest 2-day candle, which will finish drawing tomorrow. Derivative oscillator still oscillating down from all this prior down movement. Half day, as we look at it, if we look over on the left-hand side of the screen under that first gray bar, you can see that we have a laminated price percent oscillator and exponential moving average 8 period. So we don't have a crossover on that half-day chart. Derivative oscillator has gone green. And of course, up in the morning, further up, bounding up in the afternoon. We'll wait for tomorrow and see what happens with gold. But as far as gold goes, of course, what are we waiting and looking for? Well, a 2-day recross going back up again. That'd give us an opportunity to jump back into gold. As of course, we saw that prior opportunity back on the 14th of February. So again, gold has been going up for how long? Man, go all the way back to October. It's not been going up that whole time, but the price percent oscillator crossed over, went up for 3 weeks, down for 3 weeks, sideways for many weeks, and then took off starting on the week ending the 11th of February. And again, popped up and then over the last week, this prior week, and again Monday, and as we got into Tuesday. But what we've seen happen here on Wednesday is, again, gold, and I'll show you that. We can see where gold has taken off. So that's good to see. Hopefully we get a 2-day recross, jump us back in. Now Bitcoin, when I look at the New York Stock Exchange Bitcoin Index down a little bit for the day. I look at Ethereum, and I'm sorry, not Ethereum. There's two Ethereum. There's the Ethereum grayscale. There is the Bitcoin grayscale, and it is down 0.49%. When I get into the futures for Bitcoin, they sort of range from down 0.38, down 0.36, down 0.38. So Bitcoin about flat, probably down a little bit. By the way, for those of you tracking Ethereum, it's down quite a bit, 1.49%. But again, trying to take off, moving up. You can see Ethereum getting closer to crossing over, but if you look at Bitcoin on the weekly, you can see that it's not crossed yet. Will it cross by the end of the week? Well, the derivative oscillator's already gone positive on the weekly chart. Green up candle, down day to day. We'll just have to wait and see if this investor sentiment's truly going to push things through and we see a switch over from fear to greed on our biggest chart. Has not happened yet. Now that 2-day chart pulling away from the red signal line, derivative oscillator gaining upward momentum. Green up candle forming. Now again, these are Heikin-Ashi candlesticks, even though down for the day. It's showing us what's up with the average pace. And as we move to the half day, let's take a look at what we see happening. We can see where Bitcoin spiked up on Tuesday morning, losing a little bit Tuesday afternoon, and then again devolving a little bit on Wednesday morning and Wednesday afternoon. Price percent oscillator flat. So are we going to have that all-important weekly vertical crossover by the end of the week? We may. We'll continue to watch, wait, and see. You guys can backtrack this and look in the past where those weekly vertical crossovers have occurred and how incredible they have been for Bitcoin movement. And we'll continue to watch and see what the charts tell us. I so appreciate you guys being with us. Thank you for putting up with the background noise. Sorry about all that, but it is important to me to bring you this information each and every day, no matter where I am, no matter what I'm doing. And I'm always following the markets myself with my own investments. Again, 2 times a day. Look at it after idiot hour in the morning, around 11 o'clock or so, see what's going on in the charts. Then in the afternoon, typically for me it's around 3:30, check out where things are, make my decisions along the way, and then rack it in. That's the job. Again, practice, practice, practice. How do you get to Carnegie Hall? Practice, and perfect practice makes perfect. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters. Not there now, but the team is. God bless.